Good afternoon, traders. Welcome to the Moy Analytics Afternoon Energy Podcast for May 5th, going into the 4th. I'm going to start off with natural gas. Okay, in the June contract, the trade below 283.80 brought in 246 ticks of pressure down to these lows here. That's on hold. I said the break back above 276.90 now projects this upward 180 ticks plus. That was a break above here. We only rallied up to 282.10 before rolling back over, but we still have not violated that formation. If we were to fail back down below where that comes in at 275.70, excuse me, hang on a second, 275.70 minus 0.6 of a tick per hour, that's going to warrant a decent strength. Excuse me, if we fail back down through there, that'll warrant decent pressure. Right, that's 275.70. I just want to make sure. 275.70 minus 0.6 of a tick per hour. If we break above this line just above, that's going to warrant continued strength. That's going to come in at 278.50 minus 0.6 of a tick per hour. If we break above that decently and back down through it decently, look for decent pressure to come in. A maintained gap higher on Monday will leave a medium bullish reversal that'll warrant a higher trade for days, possibly weeks. Okay, crude oil rolled over a bit here. Down below this formation. Okay, we've been bullish in here since holding exhaustion at 76.73. We bounced $34.20 into this whole bullish run up. A lot of other bullish calls in here. I won't go over all those. One of them that we're in the midst of, though, is the trade above 97.10, projects this upward $4.80 minimum, $9.50 plus maximum, which that maximum needs to be shaved slightly. But we've attained $13.43 of that up into here before being put on hold today because we failed below this formation. In this formation, I said the decent trade below 102.24 plus 10 per hour will project this downward $9.40 minimum. And we've traded down to 99.30. Decent trade back above that line will warrant decent strength. That's going to come in at 105.52 plus 10 per hour starting at 6 o'clock p.m. Sunday. Also, that projection to the downside is shaved by $1, so now we're only looking for $8.40. A further break below this formation will warrant a decent pressure also. That's going to come in at 96.33 minus 1 per hour starting at 6 o'clock p.m. And that could bring in pressure back down into the low 80s. The maintained gap lower on Monday will also leave a minor bearish reversal above. Okay, in the RBOB, the maintained gap lower on Monday will leave a minor bearish reversal above. We held exhaustion below at 191.84, and it bounced up to 367.68, attaining $1.89.98 to the upside. I did suggest leaning against this again, as this is an exhaustion level at 365.44. We basically held it twice now. We've also failed below this formation, which warrants a decent pressure. Bear with me 1 second. I just want to make sure that that's actually a good break on that. Decent trade in there was 312. Yep, that was a decent break. So that projects this downward. $0.11 minimum, 17 cents plus maximum. If we break back above that decently, look for decent strength to come back in. That line's going to come in at 3 60.07 as of 6 o'clock p.m. Eastern Standard Time. A decent penetration in there is going to be 397 ticks up until the 9 o'clock open on Monday. And heating oil, a maintain gap lower in there on Monday will also leave a minor bearish reversal above. About 11. Let me just double check this penetration. Who is that? Okay, so the heating oil, we held it. Tuesday, we left a minor bullish reversal below warned about. We rallied 80.63 cents from the 344.86 open. A couple other bullish calls near those are on hold now. I said decent trade below this formation right here will warrant decent pressure. Decent trade back above where that comes in at 401.71 plus 20 per hour starting at 6 o'clock p.m. Sunday. That'll warrant decent strength again and a likely run back up for these highs. Brent, a maintain gap lower on Monday will leave a minor bearish reversal above. I said the trade above 59.69 warned of strength. We've seen $59.81 of strength from that up into these highs, but we just fell below this line, which I said will warn a pressure. That came in at 109.68. I said that I'll project this downward 375 minimum, $8.40 plus maximum. And from 109.68, we traveled down to 106.23. Decent trade back above where that line comes in at 110.66. It's going to warrant a renewed strength. Also, that the projection to the downside is shaved by $1. Bear with me just a minute. Okay, sorry for the pause there. Also, if we break above 110.40 minus 11 per hour starting at 6 o'clock p.m. Sunday, that's going to warrant decent strength. And the gas oil, the maintain gap lower in the gas oil will warrant decent pressure. In the gas oil Monday, we left a minor bullish reversal warned about below. We saw 280.25 from the 1023.75 open. That's on hold. We fell below this formation, which was bearish, and then fell below this formation, which is also bearish. That was the failure below 1254.64, and then the failure below the lower one, which came in at 1232.18, and those brought in pressure down to 1194 even. Decent trade back above this formation, which comes in at 1232.18. Plus 101 per hour starting at 6 o'clock p.m. That is going to warrant of decent strength. Excuse me, I think I gave you the wrong figure on that. Decent trade above 1240.27 plus 101 per hour starting at 6 o'clock p.m. That'll warrant of decent strength. And going into Monday, the RBOB is the strongest out of the three. The crude oil in the middle and the heating oil, the weakest of the three relative to one another. Okay, thank you for watching, and I'll see you in the next podcast.